I think the way that you should think about Nvidia at the moment and the broader AI space is that what we learned from Nvidia yesterday is that visibility, probably going towards the end of 2025, is relatively strong. You know, we learned that inferencing, so that is a usage of chips for those AI services like ChatGPT rather than the training of the models, is already 40% of revenues in 2023. So inferencing is what will drive growth over the coming few years, and that should be a very sustainable and long-term growth driver. Secondly, Nvidia mentioned that for the next generation product, the next gen GPU, they are already more constrained on supply. So that also bodes well for very strong momentum, at least this year and into 2025. Now, beyond 2025, to your point, things are a bit more murky. So visibility is not as strong. There's three scenarios that I think are realistic. One, we could see a gradual increase in spending, continued growth, continued uptick of usage of AI in different types of services, in which case Nvidia would grow along and the stock would do well. Secondly, we could see an exponential acceleration of spending on AI that is also still completely feasible at this point, in which case Nvidia would be definitely a strong buy still to hold for the coming time. And there is, of course, a risk of a deceleration in spending, more of an AI winter, if you will, in which capacity that is built out today is being absorbed. In which case, there's probably names out there that are better exposed than the likes of Nvidia and AMD. And which one of those scenarios will materialize at this point? Visibility is not that strong.
Because there are a lot of other players, and you cover some of these people as well, just in terms of what Sam Altman or Masa-san is looking to do with the Saudis, and everyone's trying to build their own AI chips. Is that feasible at all in terms of competition?
Yes, it is to a degree. So there's absolutely a place for more specialized chips, like the TPU that Google is deploying today. But GPUs offer enormous flexibility. And considering that we don't really know what AI workloads will look like 2 years from now, that flexibility is paramount. So for that reason, GPUs will continue to be the vast majority of spending on AI chips, yes.
I still want to get your views on a blue sky scenario. So yes, an AI winter is the flip side, but for a brokerage to come out and model it in a way to price the stock at 2762, doesn't that worry you?
Well, opinions make a market, obviously. Yeah. The way that I would think about it, if we see continued gradual spending of that 2025 level, we could end up with AI chip revenues, that is a business of Nvidia, of around 200 billion in 2027. Now, AMD a few months ago came out with a potential TAM for AI chips of 400 billion, so double that amount. Now, our price target, 925, reflects that 200 billion scenario. Of course, if the market is double that amount, yes, you could see absolutely an Nvidia share price well into the thousands in coming years.
2000s also?
Well into the thousands, I would say.